So first of all, I just want to say good afternoon and welcome and thank you all for joining. My name is Lorraine Mouat and I am Head of Payment Services at Thistle Initiatives. And I am bringing you a very very warm welcome to today's webinar, which is titled Unlocking Financial Inclusion Through PSD3 and Open Banking. Today's webinar is hosted and presented jointly by Thistle Initiatives and our partners Ozone API. So let me just really quickly introduce Thistle Initiatives in case you don't know who we are. We are a specialist governance, risk and compliance consultancy, and we support firms in financial services sector. We've been doing so for over 10 years now, with a team of expert compliance consultants who guide firms through the FCA's authorisations process, ongoing advice and support of the full breadth of the regulated financial services industry, including helping firms with implementation of new and changing regulations. So what I want to do now is just really invite our speakers for today to introduce themselves. Anthony, do you want to kick off?
I can indeed. Thanks, Lorraine. Yeah, obviously my name's Anthony Corner. I am Senior Manager within our Payment Services team here at Thistle. Lorraine's given you an intro to what Thistle do, so I won't go too into that. But formerly of the FCA, been at Thistle for around 18 months now, supporting a number of clients with some open banking challenges. Obviously, we're going to be supporting with PSD3 going forward as well, so very excited for that. But yeah, thanks, Lorraine.
Welcome. Thank you very much. And James, over to you.
Thanks, Lorraine. So James Bushby, I'm the General Manager for Europe at Ozone API. Also look after Head of Global Partnerships as well. So been at Ozone for 16 months. Prior to that, just really quickly, MasterCard for 7 years, and then been in sales leadership roles in financial services for kind of over 25 years after that. A really high-level overview of what Ozone does. So we help financial institutions all around the world expose standard compliant open banking APIs that TPPs can connect to securely access agreed customer data. And a very brief background around Ozone. So Ozone was founded by 3 people who played pivotal roles in open banking in the UK. They're actually part of open banking implementation entity, and they helped develop and deliver the open banking standard in the UK. What they saw firsthand was how banks were struggling with the effort of not only building, but also maintaining compliance to the UK open banking regulation. So to cut a relatively long story short, this is where Ozone API was born. So not only could they see there was a gap in technology and knowledge with regards to open banking compliance with many other banks, but they could also see open banking had the potential to be transformational to financial services. So not only driving economic growth, but also improve financial inclusion. So I guess that hopefully leads on to why the topic is so important to us here at Ozone, and again, why I'm so pleased to get the opportunity to talk about it.
Thank you, James. Yeah, it's a very important topic we're covering today. So thank you both for those amazing introductions. And I think now it's time just to move into the reason why we're all here today. But just before I do that, just a reminder that you can add your questions, I believe, in the chat function. We're going to do our best to get to as many of those as the time will allow, and we'll look at those at the end of our session, if that's okay. So let's look at what we're going to cover today. So a few key areas. Firstly, financial inclusion. Why is it important? Then we're going to look at how open banking helps support financial inclusion and looking at some of the key regulatory objectives and business benefits that may bring, of course. And then we're going to look at the role of open banking and PSD3, which we all know is kind of coming our way in some shape or form. And then hopefully we'll be able to offer you throughout some practical steps for driving financial inclusion. And then we'll go straight on to our Q&A session. So first topic of conversation is why financial inclusion is important. James, how do you view the importance of financial inclusion, and particularly in today's evolving financial landscape? And what would you say are the sort of key themes here?
Okay, thanks, Lorraine. So when someone says financial inclusion to me, I kind of think about providing equal access to financial services for everyone. So it doesn't matter what your income level is or where you live. So financial inclusion is really important because it drives economic growth, reduces poverty, and improves financial resilience. So put simply, everyone should have access to basic financial services. And I think you can split financial services into 4 key categories. So the first one is banking services, so savings accounts and deposit services. You've got access to credit, so affordable loans, mortgages, and credit lines. You've got payment systems, so sounds obvious, but the ability to make and receive payments digitally or physically, both locally and internationally. And then you've got insurance and investment, so access to products that can help protect against risks, so things like health, life or property insurance, and also access to investments. And then if take it up a level, I think there's probably two key themes if I think about financial inclusion in general. So first one is really obvious, I guess, inclusivity. So focus is on bringing the unbanked, underbanked into financial system. And then the second one is accessibility. So it's about designing financial services that are affordable, easy to use, and available wherever you need them, even for people without access to traditional banks. So this means things like digital solutions then are incredibly important.
Yeah, I think that all makes perfect sense. And just if we stay on that sort of topic of themes, Anthony, what would you add to that? And is there anything you reckon that firms would need to consider here?
Yeah, I think it's just rare that there's a single theme that can have such an importance on people's lives in general. So if people can't get access to the financial services that are best suited to them and help them support their needs, then that's clearly going to lead to a disadvantage off the bat. I think allowing equal access for customers to services which should be available to them all anyway is kind of the least that financial services firms should be doing. But it all comes with the caveat of product and services needing to be right for the individual. So customers are being sold things that they don't need or they don't want, and then that erodes trust in the sector further, and then that leads to the complete opposite effect of financial inclusion, because that's not what it's seeking to achieve at all. So it's a great idea, financial inclusion. Obviously has brilliant outcomes if done correctly, but that needs to be tailored to the specific needs of customers as well.
Yeah, makes absolute sense also. So, I'm thinking now about how open banking therefore is going to help sort of bridge this gap in financial inclusion. I think particularly, James, if I could come to you, and we think particularly around the underserved or the underbanked communities, as you've sort of alluded to previously.
Yeah, of course. So open banking helps drive financial inclusion because it enables access to financial services, helps reduce costs, and enables alternative solutions. And often they're specifically tailored to help with financial inclusion. So I'm just going to run through, I guess, some key examples that I see in the marketplace. So cost-effective financial products. So with the rise of challenger banks, many of who, in fact, probably all of them are leveraging open banking in some way. And this has led to lower transaction costs and fees to their customers. And this is important because historically, many people have been priced out of traditional banking, often due to those high fees. You've then got improved credit access. So open banking allows lenders to use alternative data. So things like transaction history, spending patterns, regular income flows, all of this can be used to assess creditworthiness of individuals. And often these individuals don't really have formal credit scores. So this really does provide an opportunity for people with no or even low credit scores to access loans, mortgages, and other financial products. Improved control of finances. So fintechs offering personalized financial management tools, again, a very key topic within open banking. So things like budgeting apps, expense tracking, financial goal setting. And this helps individuals make more informed financial decisions, which can ultimately help reduce debt. You've got inclusive payment solutions. So access to real-time payments can help individuals who rely on cash flow on a day-to-day basis. So really can help people like gig workers, freelancers, or basically anyone who needs immediate access to funds, and can also support cheaper, faster cross-border payments. So migrant workers who often can struggle to get financial services, it can help with their remittances to families. I touched upon the importance of kind of digital, so mobile first solutions. So again, the development of these kind of solutions means you don't need to visit a bank branch. So I won't talk about bank branches closing, but we know it's happening. So again, access to mobile wallets, digital banks, mobile payments really does help bridge some of that gap. And then the final point is just going to cover, and I know financial inclusion is normally focused on individuals, but open banking can also help SMEs. So access to credit and financial services, where open banking can allow alternative lenders to access real-time business account data. This can help tailored loans or credit lines for SMEs as well. And then equally, SMEs also benefit from financial management tools. So things that can help like automated accounting and cash flow management and invoicing. So all of this can help SMEs potentially in underserved regions with their financial stability and actually grow.
That's a really interesting point, actually, because we do tend to just think more about the consumer, but I think it's really interesting that there's SMEs also can benefit from some of the services as well. So that's really interesting also. So Anthony, again, just let's come to you, because I'm just wondering if there's anything you would add here. And I'm thinking specifically around reducing cost of financial services, particularly for, you know, low-income individuals or SMEs, because I guess that's an important consideration, and also maybe from point of view of adding value.
Yeah, it's something that James touched on briefly, but like this does have the potential to reduce costs significantly for consumers and for SMEs, as you mentioned there as well. So I guess due to its inherent nature, it's going to foster intense competition between fintechs and non-banks because of, you know, there's a lot of empty space in there that can be filled because of those sort of larger players who've been in the market for a period of time. I think if low-income individuals who often experience a high price point entry to financial services, as James mentioned, could now receive products that they were previously out of reach, and that's a good thing for everyone. And that's something that open banking can bring to a wider audience as well. And I think further to that, there are products that can reduce ongoing costs for customers in terms of their value add. So a number of ways that can be done, talking about things like affordable loans, affordable credit, better ability to manage your own financials, cheaper cross-border payments, as previously mentioned, and then real-time access to special offers, which can be tailored to your specific needs, which, you know, for people who aren't necessarily in this space is not something they have particular access to. And the main reason I wanted to focus on cost is, you know, although obvious, that's the bottom line under a lot of this is that if customers can't see a benefit and that benefit is primarily going to be a cost-based one, it's not something that customers are going to flock to. So all ideas are helpful, but one that will reduce cost for the end user is the one that's going to be the most effective as well.
Okay, yeah, I think this is really key here. I think, you know, just to see how open banking is not only making financial services more accessible, but also I think, you know, this is about empowering consumers or SMEs for that matter with better financial tools and insights, which is super important. So James, just, you know, looking at that, what kind of practical examples or use cases, I guess, maybe we could draw on from where open banking has helped drive that sort of financial inclusion?
So Anthony touched on some really good ones there in what he was saying around the cost side, but also some of the things they help him. But if I think about financial inclusion use cases in open banking, I kind of group them into three key areas. So first one is enhanced credit scoring, then access to fee-free accounts, easy for me to say, and then personal financial management. So I just want to go into kind of those three categories in a bit more detail. So enhanced credit scoring, this is where you use open banking data to create alternative credit scores, and they're based on real-time transaction data. So as I've already touched upon, broader than traditional credit scoring methods. So information like income, spending, savings behavior, cash flow analysis, and even looking at things like bill payments. All of this additional data can really help with financial inclusion because it enables access to loans and financial products, because your organizations offering these services can look at a broader data set than would, and if you weren't using that, potentially these customers have been denied, because if they were using traditional credit checks, they would fail. So really, really important for financial inclusion, and a really big use case and a growing use case. Second one is challenger banks, so offering fee-free accounts. So digital only banks have leveraged open banking, and a part of that helps offer fee-free open, easy to open bank accounts. So what this has resulted in is far greater access to services for individuals who previously might have struggled to open a traditional bank account because either their credit history wasn't right or the fees were too high for them to do that. And then also as part of that, it's not only easier to open the accounts, it's also easier to manage money without facing things like overdraft fees and account minimums. And the reason why this is made easier, and open banking does have quite a big impact on this, is because the apps provide things like instant notifications, so helps people keep up to date on money coming in, money coming out. Budgeting tools actually embedded in the digital app, spending categorization so that you can budget and understand where your money's going on a monthly basis. So all of this means that users can really manage their finances far more effectively. And then personal financial management. A very broad topic, but it's where we see a significant number of the use cases. So where you have open banking powered apps, this helps brings customers' data into just one single place, typically into one app. And examples include account aggregation. So this is using open banking to get a consolidated view of all of your finances in one app. And it helps gain control over budgeting and spending habits as well. You've got apps that help with income and spending patterns, so helping debt management, savings and investment advice. So where open banking comes into play here is it's leveraged to help companies provide real-time insights into users' income and spending patterns. And so what this means is they can offer personalized budgeting tools and debt management solutions. This helps people who are financially vulnerable or already in debt better manage their finances, because it works by creating manageable repayment plans. It offers advice on reducing unnecessary expenditures. It can actually, in some cases, help negotiate with creditors to get more flexible plans, and even do things like consolidate debt. So it just means that management of that debt is more effective, and it helps people advise on things they might not really understand what to do without that. And then the final point I was just going to make, which is again related to personal financial management, was advice on how to save more effectively. So using open banking data, you can analyze spending habits. You can then be given ways to save automatically. So you can set aside small amounts of money for savings or investments, and identify better deals on things like utilities or subscriptions as well. So all of this helps with disposable income and also financial stability of that individual.
I think that's really fascinating stuff, and just how, open banking's, but particularly some of the initiatives around the financially vulnerable there, with the enhanced credit scoring and the fee-free accounts as well. So I think that's all really interesting stuff. So thank you very much for that. So I want to move on slightly now to, and I think, Anthony, for you and I, being in the regulated space, we're always thinking about the regulation that's the kind of wrap around this type of stuff. What ways, Anthony, would you see in terms of the regulatory focus on financial inclusion? How would you see that's aligning with certain regulatory obligations, and maybe give us examples of some of the key benefits, perhaps for both the consumers and businesses in adopting this more inclusive practice?
Yeah, so I think there's a lot of parallels between obviously the topic of financial inclusion and consumer duty, and how the FCA and similar regulators are trying to put emphasis on firms to put consumers at the heart of everything that they're trying to do, which certainly is no bad thing. So to me, like, the regulatory objectives of financial inclusion are to allow customers to build wealth for themselves, to manage their money better through some of the tools that James just mentioned, in terms of like collaborating all accounts into one place, so there's improved visibility, the ability to participate in a digital economy, which is something that not everyone in the UK certainly has access to, and something that there's an emphasis on trying to improve, simply because the benefits available there. Also giving individuals the ability to cope with economic shocks, because if they have a better understanding of how their money works, they're able to distribute that in a different way, which means it's not all piled into one basket, and then that can be hit significantly if there's something that goes wrong. And in a more general sense, I guess, and more of a kind of regulatory aim, is to alleviate poverty in a more general sense, that people have more control over their finances. So, for example, if an individual has access to utilize products and services that were previously out of reach, as we talked about earlier, in terms of a price point, whether that was a technological or a social or a physical perspective, that is certainly something that can significantly improve their ability to achieve those objectives. And I think the objectives of businesses are also there too. So, by making products more accessible, more inclusive, they've got access to more customers as a direct result of that, and then that can lead to enhanced adoption as well. So there's a kind of long-term objective of this, rather than just trying to think in the short term. So, let's assume that customers are able to achieve some of the objectives I mentioned earlier in terms of building their own wealth. If they've got more wealth, if they've got more independence, then they're able to make more informed decisions around expanding their products that they're using, which also helps businesses in terms of their revenue streams as well. And I think if customers can see that, oh, these tools are actually really helping me, that builds trust more in the financial sector. I think it's kind of long been the case that a lot of the larger firms hold a bit of a monopoly across the population, simply due to the kind of inherent stubbornness to move away from a current financial provider. But if there's real benefit that can be seen, that's where I think these new technologies and these new products for customers can come in. But works the other way. If firms can't demonstrate that they're going to bring benefit and value and trust, then that's where there is a challenge as well. So I do think there is ample opportunity to develop those areas, but it needs to be done in the correct way.
Yeah, I would agree with all of that. And if it's okay, I'll just stay with you for a second, Anthony, and just stick with this regulatory theme. And if we consider the adoption of PSD3, I mean, acknowledging that the shape of that is yet to be confirmed in terms of what it's going to look like for the UK, etc. But what would you see as being the role of PSD3 from the point of view of strengthening financial inclusion, if at all?
Yeah, so I'll save the specifics for how PSD3 might impact open banking for James. I think he might have a few more insights on that than I do. But speaking generally around PSD3 and how it might, or what it might bring from a regulatory perspective, caveating, like you say, that there's nothing formally in place yet, but we might hear something towards the end of this year or earlier next year. It's certainly looking to cover a wider set of technologies than PSD2, so open banking, blockchain, cryptocurrency, and CBDCs, which are likely to have a significant impact going forward. There's also likely to be stricter controls around payment system access, as well as a more comprehensive approach to kind of strong customer authentication, as far as my understanding goes. I think lending itself to what James may be about to say, I think it will seek to enhance consumer protection and make it easier for customers to manage their own finances, giving some of that independence back to them. And there's also going to be a lot of focus around fraud, not least because the obligation to repay any fraud claims currently sits at 85k. That's due to come in next week. Whether that will change or not in the kind of preceding time, not sure, but that is going to have a lot of impact on a lot of firms and something that we need to be aware of. There's going to be a strong push to make sure that cash remains available for those who depend on it, because everyone doesn't necessarily rely on the digital economy as much as we might like to think. And I think there's also going to be an increased effort to bring regulators and standards close together, so there's a bit more consistency of what you're trying to do, regardless of the jurisdiction that you're operating in as well.
Yeah, I think the conversation around CBDCs, which is probably a webinar in its own, would be quite interesting. But also, I'm also always very fascinated by the fact that cash is still king for certain demographics. And I think we often think everything's just going to be digital, but there's a cohort of individuals out there for whom cash is still the means by which they pay for themselves. So James, if I can just follow up with you then. So Anthony's kind of deferred to you as he mentioned at the beginning on the open banking front. So what's your view from point of view of the impact of PSD3 and open banking?
Yeah, thanks, Lorraine. So Anthony covered the themes really, really well. So as you say, I'll focus on the open banking aspects of it. So examples of how I think PSD3 strengthens open banking, and with a particular focus on financial inclusion. You've got expansion to open finance, so huge topic. I'm not going to go into a huge amount of details, a webinar in itself, but PSD3 is expected to go beyond open banking, so facilitating the move more towards open finance. So maybe bringing in things like savings, mortgages, pensions. So integrating more of these kind of financial products can only really give individuals who typically have had limited access to traditional banking, more alternative financial services such as loans, investment tools, personalized insurance products. But also all of this will help with credit as well, because it will help build some of that credit history for things outside of the typical banking. Leads me on nicely to the second one, which is that improved access to credit. I think I've talked about that probably enough, but that again, PSD3 is likely to influence that, especially as it does if it brings in broader than just open banking. Enhanced security and consumer protection. Anthony again touched upon this. It's very likely that liability rules between banks, third parties, and customers is going to be in focus and probably defined. and so basically ensuring that if something goes wrong, consumers are protected. So this is going to be really crucial for building trust within the open banking ecosystem, and especially for any individuals who are nervous of using digital financial services. It really can help them have confidence in doing what they're doing. But it is a huge topic. Simplified consent and improved end user control. So PSD2's consent processes have been seen often as complicated and potentially confusing for users in some circumstances. And PSD3 is expected to simplify consent management, so making it easier for individuals to understand and control who has access to their financial data and for how long they've got access to it. So this is likely to be a requirement around doing something like a consent dashboard. So basically in the digital channel for the financial institution, they'll have to have a dashboard in their digital channel that allows end users to manage their consents, revoke them, see what if they've got in place, etc. And then it's also likely to allow for more granular control over financial data. So helping users clearly understand what data they're sharing and manage that. Standardization and interoperability. So PSD3 is likely to introduce more standardized and interoperable APIs. So what I mean by that is at the moment, there is no defined standard other than the CMA 9 open banking standard within Europe. So anything that gives a bit more definition and a bit more certainty around what standards should be used will only make things like end user experience and even TPP integration a lot simpler. So can only help those things. Support for digital ID. So PSD3 is likely to enhance the support of digital identification, which is going to help onboarding processes for financial services, make them be hopefully more seamless, faster and more secure, and reduce friction and allow access to financial products more easily than actually having to go in and doing things like in-person verification. You've got innovation around payment solutions. So talked about the benefits of leveraging account-to-account payments. Again, a huge topic. But with the growth of things like embedded finance, PSD3 will help enable financial services to be more integrated directly into non-financial platforms. So retail apps, ride-sharing platforms. We've seen it with Uber, but we'll maybe see it more in these kind of non-financial platforms. And then the final point is around support for financial literacy and education. So talked about this a number of times already, but personal financial management tools and personalized advice really does help individuals improve their financial well-being, and it helps them make more informed decisions. And this ultimately will promote long-term financial inclusion. So one of the things I would add, what does need to have a lot of focus when it comes to these things is ensure that people who need these tools the most not only understand how to use them, but more importantly, why they should be using them as well.
Yeah, all very sensible things, and it's pretty clear that PSD3 is going to play quite a pivotal role here. Now, I'm just getting really conscious of time, so I don't want to leave time for some questions at the end, but I just want to go into sort of the impact on compliance and financial inclusion. And Anthony, just again, thinking of those compliance strategies, how, what kind of advice have you got to us in terms of what firms need to be thinking about from a point of view of compliance generally?
Yeah, so I don't think there's any doubt that PSD3 should influence strategy from a compliance perspective if firms are applying it correctly. So they should be thinking about more stringent data protection for obvious reasons. They need to be increasing their transparency, which is something that open banking can likely play a big role in terms of just opening up a lot of information from various data sources. And I think firms need to be able to adapt to the evolving world of financial crime, particularly in relation to fraud, as I mentioned earlier on, but also picking that up in real time, because there's only going to be a finite amount of time where you can actually act before the transaction's gone. There's nothing you can do about it and the funds have disappeared. I think an important point to make is that financial institutions need to invest in customer protection systems that ensure a faster and more transparent resolution of disputes, particularly in line with the fraud obligation coming in as well. So compliance departments are going to need to monitor and manage that fraud liability across different channels, different sectors, so that customers are protected from those unauthorized transactions and any errors in the system as well. As a side note as well, I just want to say that that strengthened consumer protection can also help to build trust. I know trust is a kind of point I've lingered on a little bit today, but I think it's kind of important when adoption of a product or kind of technology set isn't as high as it could be at the moment. There's probably a bit of a concern from a trust perspective there. So, encouraging greater participation from those underserved populations is something that this can really, really help. And I think it can foster that kind of confidence in digital banking if, again, done in the right way too.
Okay, great. And James, just really, really quickly, because I'm just very, very conscious of time, just continuing that narrative, what would you think are some practical steps that firms could implement?
So I will be really brief. So I think regulatory compliance expectations is only going to get harder, which often creates both a technical and a knowledge gap within the banks, the financial institutions looking to support it. So we've seen firsthand in a number of markets that FIs initially build their own compliance platforms, but very quickly see that it is really tough to maintain that compliance, and now are looking at their compliance strategies moving forwards, looking at their technical infrastructure. So I guess organizations like Ozone, third parties like us, can play a pivotal role in helping the financial institutions update their technical infrastructure, and we can provide the platform that helps them comply now as well as wherever they go in their open banking journey in the future.
Okay, great stuff. Look, I think this has been a really, really interesting conversation. I think particularly as regulatory compliance becomes more complex, more costly, etc., and especially when firms attempt to build solutions in-house, often, that's where the pain points can come. So hopefully it's been really, really useful for all of our participants today. I've certainly enjoyed the conversation for sure. But what I want to do now is we have got a few questions that I'd really like to try and answer for some of the participants that's posed those. So just looking at the questions here, one of the questions is asking, what sort of data should firms be collecting to ensure financial inclusion? That's a really good question. Anthony, do you want to pick up on that?
Yeah, I can take that one.
Yep.
I think the first thing to say on that is that the current data set probably isn't complete, because the people that we want to, I guess, target, for lack of a better word, with financial inclusion are probably people who haven't engaged in the digital economy, and therefore it's kind of hard to get data from them. So thinking about those people you mentioned earlier on, who still believe that cash is the way to go, there's probably not much data available on them. So I think we need to be kind of innovative in how we obtain data from them. So you're not going to get them to complete an online questionnaire, but going to a kind of cash heavy industries, whether that's local shop, anything like that, and getting people to speak to people about what their needs are financial wise is probably a way to go on that. So very easy to get data from the people who are already in the space, but before you start analyzing that, I think you need a complete data set as well before you're able to make a determination on how to get more engagement and more inclusion there as well.
Yeah, that's great. Thank you. A second question I've got, which I think maybe more one for you, James, to be honest. The question is asking, what has been successful in other markets around the world for driving financial inclusion through open banking? Do you want to take that one?
Yeah, happy to take that one. Okay, I'll focus on 3 markets, 2 of which we're in and 1 we're not. So Brazil, everyone knows it's been very successful for real-time payments as well as open banking. So through PIX, open banking very quickly brought in open insurance. So went beyond open banking straight away, or very quickly. And this has driven some really innovative use cases in that marketplace, especially from a financial inclusion perspective. I've covered the benefit of open finance earlier on, but also what the government did there was a really good job around education and promotion of open finance to help. Australia, really quickly, they've got something called the Consumer Data Right there, which is the Australian open banking standard. It's focused on account information, but it has brought in broader data from utilities and telecoms. So again, it really has helped people with their finances through a single app. So they've got multiple, that's gone beyond open finance and more into open data. So really leveraging wider data to help with things like credit history and bill management. And then the final example I use will be India. So we're not live in India. We are live in Australia and Brazil. But the volume of account-to-account payments in India is insane. It's huge through the UPI system. And open banking has really helped in that market drive financial inclusion, because people are using their smartphones to access financial services, but also make real-time payments as well.
Excellent. Yeah, it's interesting. I think the Australian standards, I think that's something the UK are looking to adopt as well, I understand. So that's really, really interesting. Okay, and in terms of looking at the questions here, again, Anthony, if I could just come back to you, what are you expecting to see more widely with PSD3, which could affect payment services firms?
So I think the fraud is a big one. I think the kind of increased attention on fraud is going to play a big role, particularly with what is due to come out next week. Fingers crossed. Well, I wouldn't say fingers crossed there's no changes there, but assuming there's no changes there, we'll see what goes on with that. But I think those controls are going to need to be really, really hot for firms, because if, it's small payments firms, e-money firms, open banking firms are the kind of firms that don't hold a significant amount of capital or liquidity. So any significant claims against them could really lead to a significant problem very, very quickly. That's going to lead to reputational issues. That's going to lead to, the FCA knocking at your door, being like, why aren't you resolving these claims quickly? Why are you having so many fraud-related issues to begin with? So that's something to be aware of. I also think, and this was highlighted a couple of months ago by the Microsoft crash, that firm's operational resilience is going to be tested as well. So speaking about their controls, there's going to be more of focus around firms' kind of ability to withstand shocks. What systems do they have in place to make sure that, excuse me, what systems do they have in place to make sure that they are able to continue operation, minimize downtime for those who are operating their products and services, because that is something that can quickly, again, lead to unfavorable outcomes, lead to reputational damage, and lead to significant problems as well.
Okay, that's great. Thank you. And just one for James. I think there's a question that's kind of similar to the one you've just answered before, but this question here, will the change to the UK open banking standards help with financial inclusion?
Yeah, okay. Well, so that's quite a good question for me to answer, because one of the things we do is we provide the open banking industry sandbox in the UK. So we're the first to market with any changes to the open banking standard. So it's a topic I know relatively well. So there is for those who don't know, there is a change coming to version 4 imminently. And within that, there is a real focus on security. So in particular, authentication and consent management. So anything that helps build consumer trust can only really help with the adoption of open banking driven services. And in turn, that can really only help support financial inclusion. So trust, security, authentication, and consent is a big focus. There's also an alignment to ISO 20022. So this is all around CHAPS payments, but this could also help with interoperability with other payment systems. So, if there's migrant workers who would like to again move money outside of the system, this could really help with that. And then the final point I'll touch upon is enhanced information flows. So the new standard improves how payment statuses and error notifications are transmitted. Sounds quite technical, I know, but what it means is it's a far better user experience for both TPPs and customers, because they've got more visibility of what's happening across the payment, both from a TPP receiving the money and the customer making that payment.
Okay, great. Anthony, you get any response on that, or do you want to go to another question?
Nothing else to add on that one.
And that one, okay.
Yeah.
An interesting question here is, why do you think the adoption of open banking solutions by the public has been slower than expected? Anthony, anything to say on that one?
So conscious we've only got a couple of minutes, because
Yeah,
probably could speak for a while about this one. But I do think there's a trust issue. I think it's something that not many people know too much about. And if that was the case for me, and a company was asking me to share all my bank details, I think I'd have my own reservations about that as well. So I do think there's an education piece to be done here around what the benefits are, how safe the technology is, and where the tech can potentially go, and where the benefits are, and that sort of thing. But I do feel like as soon as it kind of lifts off more generally, there will be a bit of a snowball effect, because people will begin to see where the benefits are, how simple and easy it is for you to realize those benefits. And there should be a more wider public adoption of it, I think, as well.
Okay, great. We do have a few more questions, but I'm afraid we probably don't have enough time for them. But please don't worry, there'll be a Q&A that will be sent around to anyone who's participated. We'll get that out to you with all of our responses, of course, to those questions. And if there are any other questions that you wanna put to us, of course, we'll be more than happy to answer those. Or if you want to talk to us personally, then our contact details are now on the screen. So definitely feel free to reach out. We're always happy to have a conversation. But for now, I just want to say a big thank you to everyone for staying with us on the webinar and for attending today. It's been quite an interesting discussion, I hope. So yeah, like I say, please feel free to get in touch if you have any questions. The webinar has been recorded, so we're going to be, our lovely marketing team will put that recording online super soon. Please feel free to follow us all on LinkedIn. And you'll see when that's available to watch and to read any other interesting content that we might put on there. For now, I'm going to thank you and ask you to please have a great day. And thank you once again for joining us. I appreciate it. Take care.
Thanks, everyone.
Thank you.
Thanks.